¿Qué tal? Buenos días. Soy Rogelio Gallegos del área de Asset Management. Soy director de los fondos de inversión de renta variable. Estamos aquí con Mark Beveridge en las oficinas corporativas de Actinver. Mark es uno de los directores principales de AXA Investment Management a nivel global y además es el lead manager del fondo que vamos a vender con clave de pizarra global. Hicimos una asociación con AXA. AXA tiene un brazo de inversiones muy fuerte a nivel mundial. En México los conocemos por seguros, pero realmente invierten mucho dinero en el mundo y dedican mucho dinero a investigación, a research, y estamos apalancándonos de eso para tener un producto importante, interesante que pueda ayudarles. Voy a platicar con Mark en inglés, entonces cualquier duda que tengan, si quieren después búsquenme. Mark, how are you? Welcome to Mexico.
Thank you.
Welcome to Actinver, to our office.
Yeah, thank you very much.
About the fund, we're really optimistic and we're glad to have you as partners in this fund. What do you tell us about AXA Investment Management? Just an introduction.
Sure. So AXA Investment Managers is a very large global asset manager. We manage just about 800 billion US dollars in various strategies from equities, fixed income, real estate, structured loans, and finance. And in my part of the firm, which I run AXA Framlington, that's the equities part of the firm. So we manage stock portfolios for investors.
Good. About the fund, we're calling it the Fondo Global. So this global talent approach that you're talking to us and to investors, what is exactly this global talents platform?
So the Global Talents Fund, which is a fund that I've been managing for, it's my 5th year anniversary at the end of this month, end of August. It's a fund that instead of investing in companies, we are investing in companies, but instead of investing in companies because you think the stock is an interesting stock, we're actually investing in entrepreneurs and family-controlled companies so that we feel that these individuals or families actually are thinking about very long-term earnings growth and how to grow their companies and how to be relevant in the world. And we want to invest alongside those individuals. So these are companies like Amazon with Jeff Bezos, or you have Masa-san with SoftBank in Japan. These are companies that are very well placed to be successful in the world over many, many years to come. And we want to participate in that growth with these companies.
Good. And you mix emerging markets and developed markets now in there. You will have Mexican companies in the fund.
Absolutely. So my whole career has been investing either in emerging markets companies or running global portfolios. I've been in the business for over 30 years. And I feel strongly, or we feel strongly as a firm, that some of the greatest companies in terms of earnings growth and relevance in the world are in the emerging markets. We do have 2 companies in the fund right now from Mexico. We have Banregio, the bank in Monterrey, and we also have FEMSA.
Yeah. We in the presentation that everyone will be able to see in our network, you have 2 kind of exercises about these family-owned companies, how they do well compared to indexes, no, and also that they are very profitable.
Yes.
Yeah.
So the idea behind the fund, it's a very active fund, and what that means, it looks very different than the index. So you can't buy a Talento Global ETF, it doesn't exist. So what we're looking for are companies that are thinking about their earnings growth, because what we found from different studies is that companies that grow the fastest over 3, 5, 10-year time periods actually perform the best in the world. And so we want to make sure that we have a collection of these types of entrepreneurial companies that actually are going to be doing that, having that earnings growth. So a lot of these companies are very famous. You'll recognize some of them. Some you may not recognize, but they're equally famous in the business. The other thing is, it's not all small cap or very small and companies that are just got listed. You've got companies that are very, very large to companies that are small cap.
Good. That makes. Do you have a specific style when you manage this product?
Yeah, what we have, and it's all of Framlington, not just this product, but for this product specifically, we're long term, so we're looking at companies that are going to be successful over 3 to 5 years. we're bottom-up fundamental stock pickers. So what that means is we look at each company and rip the balance sheet apart, looking at earnings forecasts, we're looking at cash flow that these companies are generating, and we're forecasting all those factors into the future, return on invested capital, all these types of things to see whether or not these companies can actually do what we think they can achieve over the long term. The other thing is that each stock that's in the portfolio is there because we think it can outperform the index, not because it's part of an index. So it's very unique. We don't care what the index looks like. This is what our portfolio looks like because we feel that these are the best 40 to 50 companies in the world that are put into a portfolio that's very robust.
In a part of the presentation, you're talking about these investment themes that Framingham has studied over the last years. Why do you think they are pertinent to this to the approach of the fund?
Yeah, when we think about themes, themes have evolved over the past 20 years. Originally, themes would have been a technology theme or a healthcare theme or a financials theme, and that was those were considered thematics back 10, 15 years ago. What we've discovered is, first off, you can get ETFs. You can get a technology ETF or a healthcare ETF. So it's not very unique, in all honesty. And when you're buying an ETF, you're buying some really amazing companies, but you're also buying some really rubbish or really bad companies. But they're in the ETF, so you're getting good and bad put together. The themes that we've come up with, these are more 21st century themes, I guess you could say. So instead of technology, we have a robotics theme. And we're running money for a large client in Japan, running over $2 billion for this company. And the robotics theme includes people that are on the technology team, people that are on the industrials team, and people on the healthcare team. And when you say robotics, that sounds pretty techy. Well, a lot of it is robots building cars and the technology behind that. But you also in healthcare, you've got the healthcare theme for robotics is you might have a doctor in one part of the world, say South Africa, doing surgery on somebody in Mexico City via computers and having the equipment, because maybe the best doctor happens to be in another part of the world, and now we could have access to that best doctor and his services in another part of the world, say Mexico City or New York or South Korea.
The companies become multi-sectorial in a way of seeing it.
Well, the way that we put these themes into portfolios is exactly that. So the robotics theme doesn't have just a technology guy managing it. Actually, the person running that robotics fund is the person that's is the head of the industrials franchise for us.
For example, you were talking about this example on Amazon and Walmart. No?
Sure. There's another theme that we're looking at is digital economy, and with the digital economy, it's the technology guy knows all about Amazon and eBay and companies like that. That's pretty straightforward. What he probably doesn't know about is that Walmart in the U.S. is spending billions on their e-commerce strategy, and Jeremy wouldn't know that. He's a technology guy. However, we have Anne, who's our global consumers analyst. She knows all about Walmart. She knows that they're acquiring people, companies. They're really investing in e-commerce so that they can play in that space in the coming years. And having, say, a digital economy portfolio, having both Jeremy and Ann on that team together, you're getting a more well-rounded portfolio, and you're going to be able to get exposure to parts of the different sectors that you wouldn't even think about if you were just a technology person.
That's interesting. The companies are evolving with
Yes.
the world, no? So.
Well, these portfolios, our company's evolving. And clearly, so you're not thinking e-commerce with Walmart, clearly, and those companies are forced to evolve or they're going to die. So they have to do that. But for us to evolve with the way that the world is going and heading, and putting our teams how they work together differently than what they would have worked like together maybe 5-10 years ago, I think really puts us, it's a competitive advantage for us, and I think it's helping to position us to manage client assets in a very effective way going forward.
Good. Tell us more about your team. How many people do you have behind this product?
Well, I'm the lead portfolio manager of the Talento Global. I've been in the business for over 30 years. My backup is Ann Tolmanen, who's also the head of our consumers team. So she's my backup. So the two of us are the primary and backup portfolio managers. We have a product engineer. Sounds fancy, and actually it's a very critical role for us. That portfolio engineer sits next to us when we're building and constructing these portfolios, so that we make sure that we're using risk intelligently and that there's no unintended risk in the portfolio, and make sure that every stock in the portfolio is able to contribute to the alpha or the performance. So we want lots of little ways to win, not just one or two big factors that are driving performance. Now, of course, it's not just the three of us managing this portfolio. I've got a team of 7 sector specialists, global sector specialists that are working. They have their own portfolios, but they also are coming up for ideas on the Talento Global. And I also am supported by a group of regional specialists. So we have the European team, the Global Emerging Markets team, which is really critical for us, especially in some of the emerging market holdings we have in the portfolio. We have small cap, we have UK, and we have the global team. Good. So it's a really, we've got, everybody's really a resource for us, and I guess I feel very, very lucky. I guess they all report to me in some form or fashion, so therefore they're going to be motivated anyway. But even if they didn't report to me, that we're helping each other out in coming up with the best ideas for our
you never know where an idea will come from, no?
Exactly.
That's I mean, in my view, that's interesting. It's very helpful for this product, and it gives you a lot of detail for you to take a decision, no?
Yeah, absolutely. Absolutely.
You have a lot of experience. This question I made it to a lot of guys that come here. What is can you talk to the people about your best decision and your worst decision when you're investing money?
There's a lot of good decisions and a lot of bad ones, I have to admit. But thinking about some of the
ones
you will always
remember one.
Yes, so some of these that are in the fund, I would say that probably our purchase of Christian Dior, which is how we were playing LVMH, which is Arnold.
Louis Vuitton.
Yeah, exactly. Bernard Arnault as a company is Louis Vuitton. They make the handbags and alcohol and things of that nature. So Christian Dior was majority owned by the family, but it was trading at a big discount to LVMH. And so we had patience. We bought this. We knew at some point the family would probably buy the rest of the Christian Dior stake. And so we bought it back in 2012, made decent performance along the way, but the family just a couple months ago bought the rest of the Christian Dior stake at a big premium. The stock took off, and we did really well with it. And we're not taking the assets and buying LVMH because that still is a bit late in the cycle. I think it's actually a bit pricey. Okay. But we really enjoyed the run. Now, the worst one that I'd say was in this fund was Bell International. Now, Bell International is it's the largest Chinese bricks and mortar footwear retailer, so in China.
They make shoes? They sell shoes?
They sell shoes, but not shoes necessarily famous shoes, but shoes in general. They do sell Nike and things, and Adidas and things like that. But they sell lots of different no-name type shoes. And the investment thesis that we had was that it's not internet proof, but I thought it would be internet resistant, because since they're no-name shoes, you really don't know how the shoes would fit. So the Chinese people would have to go to the stores to try the shoes on, to see what the style, because they were unrecognizable, and to see how they felt, and then they would buy them. So they would still continue to go to the stores. What we found is we were totally wrong. The people were buying shoes on the internet using Alibaba and other internet websites. And these guys really suffered. So our investment thesis morphed into something where actually they felt that they were losing a lot of market share, and so they started taking a lot of cash and started to invest in their own internet platform.
Mm-hmm.
Thank you, a platform, and that was just hemorrhaging cash. We didn't buy it for that reason. We bought it for the bricks and mortar, so we sold the stock. Sold the stock at 20-something% loss, so it really hurt. However, the stock is far below that now, so at least we had the foresight to get out when we found out that the story morphed into something we didn't like.
Ah, great. Pueden ver que detrás del producto que estamos vendiendo, pues hay una plataforma muy importante en el lado de AXA. Creo que va a ser un producto con un éxito importante. The last question: what do you think about the markets at this moment?
My view on the markets is the best time to invest is when you have the money, because you just can't predict the tops of markets, the bottoms of markets. If you say, I think the market's going to go down, and you sell, that's one decision. Maybe right, may not be, but then once you sell, when do you make the decision to go back in? And if you don't get both those decisions perfectly right, you're going to lose money, and you're better off just staying and averaging in. So when markets go down, you put more money in. When markets are going up, you're buying less shares, so you're putting less money in. In terms of market direction right now, I'm positive.
Ujú.
It's you never see what's going to really cause the next bear market, and anyone that says that they can, this history has proven that they're not. That's not correct. But it's if you look at the alternatives, you're going to invest in fixed income, or you're going to invest in real estate. I think that equities actually have a lot of earning support right now. If you pick your companies right, and you think about owning these companies for the next 3 to 5 years, like we do in Talento Global, I'm pretty relaxed.
That's why this kind of funds with stock picking looks like a much better investment than a normal ETF, no?
Yes,
Where you
I
buy
agree.
good and bad companies.
And the other thing about that's actually a very interesting point. In that sense, we look nothing like the ETFs and nothing like the index. If people start getting nervous about equity markets and they start selling, the first thing they're going to sell are the ETFs.
Yeah, true.
And the ones and ETFs are built on the best performing companies in the space. It just has the big ones get more capital than the small ones, and so therefore the less you look like the index, the less you're going to get impacted by the index when it gets hit, when people start taking money out of ETFs. That's my view.
I mean, you have a lot of experience and well, totally valid. And as you say, in my view, also it's impossible to know when you will have a broad movement in the markets. And politics now are playing also like a game, complicating things even more. No, but so these are our times. Well,
That's true. I guess the last thing on that is the things that we thought were really scary, really bad in terms of politics and this and that. If you look at the direction of equity markets, they still go this way. It might be looking like this, and sometimes they're, oh my God, this is terrible. But longer term, they go up. So if you buy and hold and stick with it, and don't panic when markets are down 5 or 6%, that you might even find that as a buying opportunity. That you'll be a long-term winner if you're in equities.
thank you for your visit.
My pleasure.
We'll be seeing more of our people in their branches in the
Yes.
coming months.
Looking forward to it.
Gracias a todos. Espero que esto haya servido para que se entienda mejor el producto que estamos vendiendo. La clave de pizarra es global y ya está disponible en la red, todas las plataformas de venta.